Let's focus in on now the dollar and on gold. Joining us, I'm pleased to say, Philip Deal, who is the President, US Money Reserve. Let's start with gold, shall we? Because we are seeing a bit of a pullback at the moment. I do want to get your thoughts on just how you're assessing the weekend's headlines and what we're seeing as far as the market reaction today and what it could mean for the trajectory of these gold prices.
Yeah, we won't really know the full impact of the bill until maybe for months, because it's 1,000 pages of complex and dense tax code language. But we know what the centerpieces are and what some of the most immediate consequences are going to be. First, the centerpiece is the permanent extension of the tax cuts that were in Donald Trump's 2017 tax bill. And everything else in the bill is really built around that centerpiece. And making it permanent was an extraordinarily complex, or politically complex and expensive proposition. Of course, the reason why we're dealing with it now is that in 2017, it was too complex to make permanent under the way Congress counts the impact of legislation. So the other pieces that were added to the bill basically were the spoonfuls of sugar that made the medicine go down for people who, legislators basically, who felt like that they were left out and required additions to the bill. And that included the expansion of the SALT tax credit and some other programs that really impacted lower middle income and lower income people. So, and the impact is going to be really seen through not just the tax cuts and their impact on businesses, but also on the impact on inflation and on interest rates going forward.
Right, so we might have some clarity certainly on that becoming law, but we need to see sort of how it filters its way through the system. I mean, as far as what we've seen with gold, you know, maybe a bit of a pullback in terms of, you know, a safe haven trade from now. But I mean, does the sort of long-term story remain intact? But particularly because obviously you've mentioned the big beautiful bill, but we've got the other story that we're keeping an eye on, and that is the tariff impact too, and these trading relationships.
Yes, that's right. There's two elements of the big beautiful bill that mix into the tariff equation. One is there's going to be a lot of uncertainty. People think we know what's in that bill, but as we get closer to the details and look under the covers, and we look at what the longer term impact is, I think the bill is going to add to the uncertainty in the marketplace that we see continue to be extended now out to August 1. And we also know that trade bills and trade agreements, many of the details of them are really worked out in intense negotiation over the parts of months. And so I think what we're going to see is the outlines of agreements with a lot of questions left in the air about what the true impact will be. So I think this is a mix of additional sources of uncertainty. And also what we're going to see is that some of the tax benefits that have been included in the bill are going to have an impact that reinforce sort of the America First trade policies of this administration by raising barriers and giving U.S. companies higher advantages in the marketplace.
And so what does that mean for the dollar then? Because we've seen that picking up ever so slightly off the back of the weekend's commentary. But obviously, we've seen the dollar under pressure this year. What are your thoughts on where we go from here?
I think the administration has the intent of continuing to lower the dollar, not at the rapid rate that we saw earlier in the year, but the intent is to continue lowering the value of the dollar. This is one of the reasons why I believe that this bill is going to have reinforce the forces that have driven the gold market. We're talking about greater uncertainty, economic uncertainty, and the impact not just in the U.S., but around the world. Strengthening of tariff barriers and uncertainty related to that. Higher inflation rates, and more questions about how fast and how low can the Federal Reserve lower interest rates. So I think we've basically seen most of the benefits of this bill already discounted in the marketplace. We're seeing some evidence of that in the indices today, and I think I'm not as confident that this bill is really going to rally asset prices, at least for some period of time here, as things are sorted out. And as we come to understand what is the impact of higher inflation and a lower dollar on U.S. asset prices.
It's interesting. I was speaking to so many FX analysts earlier this year who were sort of wondering whether the messaging was clear on whether Trump wanted a stronger or weaker dollar. But I was also listening to Besant this morning, who was asked about the dollar, and he said that, currencies naturally fluctuate. And under Trump's first term, it fell 7%, but then picked back up. And this time around, he's pointing to very much the euro appreciation and the renminbi depreciation, which doesn't seem to be talked about as much. But, one of the conversations that very much has been dominant is dollar dominance being threatened. So, what's your take on this narrative?
Well, I've been a skeptic about the end of dollar dominance, but that was until Liberation Day, and it became clear how aggressive the administration, how committed the administration was to this America First agenda, and lowering the value of the dollar is crucial to the success of that concept of moving more manufacturing back to the United States. When you hear leaders and economic leaders talking about currencies will naturally fluctuate, that's really code language for we expect it to go down. It's sort of it's a euphemism for a policy that intends to bring the dollar prices down. And in that context, I definitely think there's going to be more discussion about the end of dollar dominance. And the president just this weekend really went after the BRICS countries and threatening to raise interest rates on countries that support BRICS. So assuming that that applies to the BRICS countries themselves, I think what we're really looking at is growing tensions with those countries that would like to see greater independence from the power of the dollar.
It's obviously not the first time we've also heard Trump taking aim at the BRICS countries either. But, an interesting part of the whole picture right now, particularly with the trading relationships. And it's always nice to have people like you on, Philip, because they can decode some of the language coming out of the White House. So very much appreciate it. Thank you for your time today.
Sam.
Philip Deal, who is the president of U.S. Money Reserve.